Tesla's just acting choppy right now, so we'd be looking for an opening range break to either direction.
Lower day getting volume.
Yeah, I got shot VNet and the 13.
Gonna look like a opening range break to the downside for Tesla here. At least it's trying to.
Apple rubber band for 115, 116, sorry.
I shorted some MSTR into that 300 rejection. Yesterday's lows, pre-market lows.
Very nice volume in VNet.
Tesla looking pretty interesting here.
Yeah, it's looking like it's trying. We'll see here above 342.
Users selling pretty aggressively right now.
Is anyone short on Binet?
Yeah, I'm short Vinet.
Mm. What are your target plans?
Yeah, my target is like 1150. That's the first target. And then I will keep the rest for, let's see, another day maybe, some 20 30%.
Okay, man. Thank you. He'll TRS you when you load, eh?
Yeah, I'm short PLTO.
Are you thinking for a momentum trade or like a trade to hold? You think?
More like a trade to hold.
Yeah. You shouldn't have to go above 95 again.
My target is 85 for a gap fill. Potentially, of course.
That would be great, but
Tesla at opening range, break level. If it breaks, I'm gonna wait for the break. Look for a retest or something to get involved.
Yeah, enter Tesla, small size. I'm out. I think we'll wait for the next break if it occurs.
Guilty on your low day.
Yeah. You know what? I might take like a quarter after you make after one ETR. You know?
What price do you have that? From the low day,
I
from the
have
open?
multiple. My average price is 95, 96. That's my average.
Nice. Very good. So the 180 from, are you looking for high of day or from the open?
Yeah,
The
from higher day. From higher day. So around 91.50.
okay.
Opening range break on Tesla to the downside. Volume's coming in too.
Qs are sent off for an 90 MA rejection of pre-market. If it breaks low in the day, goes red below 526, maybe we get some momentum to the downside.
You're looking for a momentum or more like a bigger move?
Or just momentum. Yeah.
It would be more of just momentum, just because of the catalyst not wanting to step in front of it.
Yeah, yeah.
Also, the Tesla short, and if we'll not see the momentum, I think it will be chopped for today.
So still holding BLTR. PLTR approaching 1 ETR.
In terms of levels, we just have the gap there. We don't have like any price action reference in PLTR. So
You know what? I'm gonna
Q
take
is
half.
breaking.
I'm gonna take half because I max size PLTR.
Q is breaking from Friday lows.
oh nice. Thanks man.
Yeah, Baba below 131. If it retests some kind of a consolidation, I will look for a trend trade.
Took half, cover half PLTR. And
I will
might get
I
I
will
might get what's up? I might get
with the
flat
market.
if I might get flat PLTR because it might be setting up for a rubber band.
I'm trailing
Covering some
the 9
MSTR
on
here,
the 1 minute. But yeah, it's a good point to the positions. Man. Looking at the market, the market relation.
One in MSTR breaking their higher time frame range. We look for some kind of a small level big dog if market keeps selling.
But by the way, 70% of all stock are below VWAP.
Yeah, that's true. I think it's the overall market that's selling.
VIX is testing this at the highs at 19 level. And RTY is also below yesterday lows. Bitcoin testing also yesterday lows.
Looks like things are starting to bounce. PLTR potential overbang.
Also had CMCI in my watch list, but relative volume is not as high as PLTR.
Yeah, I closed Tesla short on pre-market lows. I think we can get a little bit of bounce of the pre-market close at least to the 9 EMA.
CMCI pushing low day. Sell short the LTR.
It has been below zero all the day, and also the ADD line is trending negative. It started positive on the day, now it's negative. The ADD.
What you said about the ADD?
That is trending negative. It was
Oh
positive
yeah,
at the beginning of the day, on the first
yeah,
almost
yeah,
10
yeah,
minutes.
yeah, right. But the
I'm looking.
VIX is close to 20, so the volatility is about to
Yeah, it's breaking. VIX is breaking the
yeah.
yesterday's. So I'm more like inclined to hold the trades.
LTR looks like
ES
a
is
fell
ES
follow
is
through.
testing the the 6,000, the 6K, very important level here in the ES.
Tesla really extended intraday.
Cover some LTR for fell follow through.
I'm covering more MSTR here, 287s.
I'm not short SMCI.
Looks like a possible rubber band there for Tesla.
Yeah.
ES is trying to bounce on this 6K, but sellers is still there. Let's see.
Short SMCI.
Good.
Target 50 for SMCI.
It's like second chance there. Still holding. Oh, the ES is losing the 6K. That's very nice for that short side. Let's see.
Halo, did you take the Tesla opening range trade?
No, I did not.
Hmm.
But I would say looking at it, I would have been out of it there into that 330 on that 2-bar high break.
Yeah. And still holding the 9 EMA on the 1 minute was
Yeah.
crazy at 10.
PLTR set up for hitchhiker short.
Acceleration on the ES. Same for the Qs. Nice.
I'm covering more of MSTR here. Flush into 82s.
PLTR breaking low day.
Yeah.
It had lost momentum PLTR, but let's see if we can pick some momentum or not. Maybe it's extended for the name, but let's see.
Yeah.
Alright, I'm all done with MSTR. It's overextended now to almost 1 ATR.
Target for SMCI is 50. That was the recent breakout.
I'm starting to look Tesla long the intraday extension of this 340 25 support.
I will still holding Tesla trailing the 9.
Already having my best day ever.
Nice.
Yeah, I'm still short SMCI, still short PLTR.
Yeah, the market is just at the key level, so if this continues, we need to hold. X is above 20 now.
SMCI is real extended on 5.
We'll take a break. See you in some.
Got flat SMCI. I had a 2-minute bar break. Trailing stop.
I covered half of my all close short on that low day break into this 34 level, and just trailing the rest following the 9 EMA. And I'm also holding short PLTR for that hitchhiker 92.50 rejection. I'm gonna trail this 9 EMA style. If all of these starts to bounce, I'll probably look for a second chance.
So
short.
the tick
IO
is
and
not
Q
able
on the 20.
to go below 600.
Say that again.
I'm looking at the tick, and it's not able to go below 600 with such a selling volume.
Cover some PLTR.
I'll get long Tesla here.
Oh, nice.
Yeah, I'm looking the spot to add to Tesla.
Yeah, I'm looking for the
Oh.
backside. I wasn't paying attention.
Careful here, cause things could start bouncing here. All close enough for a rubber band.
Looking for VWAP continuation for SMCI potential.
So on this catalyst on Tesla, I would expect this to return to high day. So not looking to take off any at VWAP, and I would expect that it would put in a fashionably late.
Yeah, the thing that with this move is too fast of a bounce. So I'm looking for some consolidation and the continuation out of it to add because it's like maybe it's rubber band and too quick up to VWAP, but I'm watching for a proper backside in this case to add.
Yeah, I was just saying in terms of exiting, I'm not going to be eager to exit at VWAP.
Yeah, it's a possible scenario, but I think it would be too late to add into position into the fashionably late, you know. So either right now or hold the VWAP or have the day.
Yeah, I'm not going to add on. I don't take the fashionably late, but it would be a sign for me to keep my trade on. If that makes sense. I think this plays into this high strength, high weakness thing Jeff has been talking about.
I'm looking at IONQ for a second chance short into yesterday's
Yeah, could be so.
and today's lows.
but for me, it was the tick that showed the potential reverse in this name. So, yeah, I think the wise choice would be to watch if this momentum will continue, especially for the Qs and the VWAP.
SMC for VWAP continuation. I'm still short PLTR.
So I'm still holding Tesla. Just looking for a higher low to be put in to raise my stop.
Yeah, I'm still holding too.
VIX just got above 20.
So the volume in Tesla decreased with this down move. And the tick still holds above 0.
I just drew a trend line on VIX. We sort of are having a breakout trade. It was downtrending, making a series of lower highs, and now it's getting above that trend line.
What time frame are you looking at VIX?
That was the daily.
PLTR knee lower day. They broke. Gosh. Or some PLTR for the fake follow through to the downside.
These look like they might be putting in a backside.
There is no point developing a VWAP trade.
You can short SMCI below 52.50.
I'm gonna exit Tesla if it drops 127.
Short SMCI.
Yeah, I'm short coin 229, risking 230.
I'm out of Tesla.
Yeah, TL and low day. flat PRTR.
What's up, bro? Same here. Where you been?
Potential bouncing ball, BLTR below 89.50.
Baba Big Dog.
Alrighty, guys. I want to say I want to hop on out, and I'm going to start the 11 a.m. here.
curious from your
Recording in
perspective
progress.
what you might be experiencing with regard to discussions that you're having with people outside of the space that we trade, maybe a little bit higher time frame. How are they thinking about the markets? And then we'll get into the context of what we're talking about. But let's start there.
Yeah, that sounds good. Can you hear me okay, Jeff?
Yep, gotcha.
Awesome. Okay, so I'll mention two different things. First is that many of the hedge fund portfolio managers and teams that I speak with have been frustrated this year. Why are they frustrated? Because, like you pointed out, Jeff, they do hold for longer time frames. And when we get one headline after another headline, one Trump quote after another Trump quote, we get this whippy kind of action. And so we have an unusual market, if you look at the stock market overall, where day to day, if you look at the size of the bars, they're pretty good size. This has gone on for a while. But when you look at how far we've traveled over time, not at all. So we go up, we go down, we go up, we go down. And so it's not only quote unquote choppy, it's volatile and choppy. And that is very difficult for someone who holds over longer time frames. Certainly difficult for an active investor. So that's the first backdrop. So we have lots of people getting into the market, getting out of the market, getting into the market. One thing I think I've shared with you, Jeff, and with the group is that when I first joined the hedge fund world, and this was a while ago now, but when I first joined at the fund that I worked at, Tudor, the allowable downside in a calendar year was 20%. In other words, if you lost 20% of your account money, then that was a kick out level. You're done for the year. And so you would go down 5%, or you go down 10%, and you would have reviews, and you would shrink the size of your book, so you'd never hit the downside. At most of the funds now, if you're losing 5%, the risk management teams start going nuts.
Wow.
Yeah. I mean, it's incredible what a change there is. Now, think about what that does to your trading. Imagine you as a trader and you're only allowed to lose a little bit each day. Well, obviously, you would have to manage your positions on shorter and shorter time frames because you couldn't stand volatility. Now, in the hedge fund world, they can also diversify and hold lots of different things and try to balance their risk, and that helps quite a bit. But the bottom line is they have a mandate to make money, and they have an equally strong mandate to not lose money. And so when we get this volatile choppiness, it means they have to get out. And often they're getting out at the worst levels. They're getting out at the wrong times. And so that's a backdrop to what we're seeing here. Okay, so that's the first thing.
Yep.
And then I'll mention the second thing, and then I'll STFU, which is that's not a stock symbol, STFU, in case you weren't sure, Jeff. Anyway, so the general rule here is that changes in relative strength precede changes in absolute strength. So what we've had recently is a market that has made marginal new highs, if you look at the S&P, for instance. But the relative strength, if you look among the different sectors, has really gone downhill. The breadth of the move has really been weak. So we have many stock sectors nowhere near their highs, and one or two or three sectors accounting for the great majority of the recent strength. So the shift in relative strength precedes now what we're seeing, because once they start selling what had been strong, like the NASDAQ shares, then there's nothing left to hold up the market.
Now, one thing that I was curious and would be very interested to get your thoughts on, because of you've been doing this for a period of time. You've been a trader, you've worked with traders for a significant period of time. I think a lot of people don't realize that you actually started out having an interest in trading because you were trading, because you were just you wanted to be a trader. It's not that you were a psychologist and then people said, "Oh, why don't you come work with us?" You were actually actively participating in markets on your own. Is that correct?
That's absolutely correct. And I've often said that the real expertise I have is that I have personally made every trading mistake that can be made. and so being a trader as well as a psychologist has certainly helped me understand what people go through in markets.
And so that's a fascinating thing, but you've seen these markets, and I know you're a big believer in the cyclicality of markets. You've talked about market cycles before. How much of this might be just normal cyclicality versus bigger picture monster changes? Because I think when we see a change like Friday, a lot of people tend to get a little bent out of shape. And we'll hear it on our call. It turns everybody into the prophet, right? Everybody's saying, "Oh, well, this is the top, that's the low, this is like everybody has their opinions magnify very, very quickly." But
Yes.
how many, just off of your experience in working with traders, but then also being a trader yourself, how many aggressive pullbacks like this have you seen through your trading career?
Yeah, great question, Jeff. And many, many pullbacks. And not every pullback is the start of a bear market or a big decline, right? I am open to the hypothesis that we've been seeing a long-term topping in the stock market.
Yep.
So we saw that in the late 1990s and 2000, and the market didn't bottom until 2003. And we saw that in 2000. We saw that in 2000 was the top, late 90s. We bottomed in 2003. And then we saw again the market make a top in the 2009 area, 2007 area, and then come down to 2008. 2009. So the bear markets were of significant length. Those are longer term cycles in the market. I'm open to the idea that we're seeing the topping of a longer term cycle. And if I had to guess what would be a trigger for that, it would be the combination of economic weakness due to tariffs and due to unemployment, combined with a loss of confidence, particularly from international investors in the U.S. stock market or in the U.S. economy more broadly.
And so they're looking. So there's a lot to unpack there, and I don't want to get into too much because for us as intraday traders, does it matter if this is a pullback or a higher market correction? It does, but it does with varying degrees. Our job is to trade what's in front of us. So that's a really important factor. But I wanted to highlight something, Dr. S., you just said, which is you are open to the idea. You are actually doing what a lot of people, you're avoiding that mistake by saying, I think this has to be, this looks like, this must be. Those are all much more definitive statements, which actually lose the it almost puts you into a mindset where you're looking for the data to support that versus you saying I'm open to, which allows you to look for pieces of information. Obviously we can look at the bigger picture here, and we bounced dead off of, at least in Qs, 520, which is key support. SPY, we bounced pretty much right off of key support, right? Does that mean we won't roll over, go lower later and all that? No, but if we get a 520 break, I've been watching Qs a lot more because of the severity of that move as of yesterday, Friday into today. But if we put in a bouncy ball pattern, a tidal wave pattern at 520, guess what? It's going to be a really good trade because that's going to be the setup changing. We went from a breakout, which we were all talking about last week, and I'm sorry you weren't able to join us last week in the meeting, but we were all talking about this breakout. You can see that 1, 2, 3, 4, really 5 bars right up there did not feel appropriate. It just did not feel like this was a great breakout. And it just took some time, but then we saw how when we can kind of feel that, wait, things aren't acting the way they should if the market's breaking out of this big range. When we see that rug pull, we corrected right down to a key support area, down to that 520. We did it in a day and a half, or day and an hour, which is pretty crazy. And there's an openness to this being a bigger range break. But we went from, when we're going to our setups, we went from a breakout to a failed breakout, and now we're in range. Now we're at more volatility in range. Now, could we, in an hour from now, or 30 minutes from now, or 2 days from now, break 520 to the downside and have a range break to the downside? Absolutely, we could. But I think a lot of traders look at one piece of information and forget the setup component to it, which is these things always happen in stages. And the more you can ground yourself in what's actually happening and remain opportunity focused versus what you think might be happening, especially for us on the time frame we trade, the more you can just stay in the flow of things and look for the opportunities as they get presented. I have no idea if we're going to bounce and go to 529 today in Qs, or if we're going to break 520 and go to the lows. I really don't. Do I care? Not really at this point, because I'm going to wait and see what happens. I'll tell you more as the day evolves, but at this point, I'm not sitting there and having a strong preference which one happens, but I'm aware that we have factors like Dr. Steenbarger talked about. We also have factors that show we just pulled really fast into a key support area. So in an intraday or lower time frame, could we absolutely bounce? 100%. Could we look like we're closing pretty strong? That would actually be pretty normal given the tick readings are pretty positive today. If we can take a look at tick, like $TICK. The tick readings are not what I would expect for a massive downtrending day, particularly right after 11 o'clock, now that we're holding the zero line. Does it mean that we're exploding to the upside? No, but again, these are all factors that we're thinking about and are important to allow you, and ADD is flat. Thank you, Darius. It allows you to stay grounded in what's actually happening versus getting too predictive. And since this week is emotional awareness week, and we brought Dr. Steenbarger in here because he can help provide a lot of light into this stuff. But, you want to recognize a lot of being emotionally aware, and I apologize that emotional awareness might not be the right term, but a lot of what we're actually doing is trying to understand our own triggers, understand what things get us outside of that opportunity focused mindset that we really want to be in as much as possible as traders. And for some people, that occurs when they notice a big change in the market. And in fact, what they do is make it really hard on themselves because they'll miss the easy trades that are just straightforward in your playbook, things that you can execute on every day. And you'll actually be only looking for the trades that fit the narrative that you have in your head that's this bigger opinion.
Yeah, if I could jump in here, Jeff, you're making a real good set of points, and it's back to that idea of being open to things without having a fixed view. A very good point out with respect to the tick, with respect to ADD. What's the Dow doing so far today?
Let's take a look. Caleb, can you throw up the Dow? DIA, yep. Pretty nasty range break, right?
Yeah. Yeah. So the Dow on the day, compare that to the S&P.
Yeah.
And
let's just look at SPY, yeah. We'll just look at the look at the ETFs from here on. So
okay.
Yep. So there's SPY, and you can see that important level at 598, right? Yeah, let's go to DIA, please. Thank you. DIA barely took out the lows from Friday.
Exactly.
Let's look at SPY. If we can look at one thing that I've been watching.
How about IWM, Jeff?
Yes,
Look
that's
at the small cap.
exactly it. That's exactly the one that I think was the most important to look at.
The divergence between the strength and weakness between SPY, SQs, and IWM. IWM is the weakest out of all of them, or has been on the higher time frame.
Well, also look at what happened in the setup there. It actually broke the range right on the open, or it broke the range on Friday even.
220.
Yeah, it broke the 220 range. So you have the range breaking, which is really, again, we talked about the setup changing. And the setup there changed. IWM did not have a failed breakout like SPY or Qs.
Correct. Yeah.
It just had a straight breakdown on Friday. So would you expect, or would you be looking for indications that this is going to be weaker for right now? Absolutely.
Weaker.
Because it actually had the breakdown. So let's go to, yep, go ahead.
And Jeff, as we bounce off the lows that we made this morning, I'm looking for the breadth of that bounce and the participation in that bounce. If there's buying across the board and everything's going up, that tells you one thing about what the big players are doing. If it's one group of stocks going up a whole lot more than others, and some stocks really not going up much at all, then that's a continuation of the relative themes that led to the initial top.
And that's a key distinction to be making is and a lot of traders, you'll actually hear more clicking on the keys during a situation like this than you will normally on the desk. And what do you think that clicking is? I can tell you, it's definitely not people checking X and typing X tweets right now. What do you think that clicking is? And typically it's 5 clicks. It's like click, click. What do you think people are doing at that point? Yeah, that's exactly right. No, they're not actually. Maybe a lot of times at this point, you have your positions, your exits up. Like if you're long stuff, you already have your exits fanned up for whatever piece you're taking off because you're not really sure. But you're looking around at charts. You're looking through your list of names or ETFs, or even for some people, they're looking at cross markets. Most of us are actually really focused on the names that had really strong breaks early today, the ones that showed the extreme weakness early, names like PLTR, names like MSTR, names that showed a tremendous, names like NVIDIA, which had just a ridiculously aggressive sell-off. Tesla's a little different. Coin a little bit less because just because that's already been sold so much. But things that made clear breaks today, you see the, let's go to PLTR, please. You can see PLTR had that 2-day range and a clear range break today, right? So that should be showing leadership to the downside. If that's starting to bounce, and if it holds up with a really strong bounce, is our argument that we could see more downside today a valid one? Well, less so. Maybe you lose a little bit of our strength there in the argument. Let's look at MSTR, please, because MSTR cracked 300 today. And that's been, another very clear range that then broke. Well, MSTR had that little rollover right before 11 o'clock, right? And then it kind of started to rebid. So now we're at these very interesting levels where we're in the information gathering stage of this part of the trade, much more so than we're in the execution side of it. There are some trades that traders have on still from the lows and from some of those failed new lows. But most of the traders at this point are actually taking their emotions out of it, and they're just in whatever trade, and they're looking around for information. A lot of traders are thinking, are we going to get really good fashionably lates here? Okay, if we get a good fashionably late, which is a specific trade where the 9 EMA crosses back above VWAP, we're going to need to see a lot of breadth. We're going to need to see real buying across a lot of names, right? If we're seeing backsides, which just kind of a lot of them are just finishing right now, you had your exits right there. If we're going to see continuation trades later in the day, maybe trades where we start to hold up above VWAP, right? Those are trades that we might look for with a big dog consolidation style trade holding above VWAP. Those are things we might look for. But if we fail at VWAP here across the board, Qs get up to VWAP, they fail hard across the board. What sort of trades are we going to be looking for? Well, we're not going to be buying more stuff, hoping that the low stays in. If ticks all of a sudden drop below 0 and VIX, let's go to VIX, please, because that was a really interesting one, VXX, and VIX catches a bid again. If VIX has this really strong rebid and starts to hold essentially above yesterday's high, that's a giant indication that maybe we're going to have to look at more short-based trades. But right now, you will hear across the desk a ton of typing on the keys and a ton of like, oh, maybe this is that, maybe that's that, and a lot of thinking going on. Much less predicting. Yeah.
If I could just jump in here, and I'm glad you mentioned the VXX. One of the things that kills traders if we were to get into a bearish market cycle is that in the bearish market cycle, what trends higher but volatility? And with higher volatility, everything by definition moves more. And so what kills traders is that they don't adjust for sizing. The moves are much more extreme. The market or the stocks are much more volatile, and the risk management can become a lot more difficult.
And what we're meaning is simply changing the location of your stop relative to your entry is usually larger in higher volatility environments, but people enter with the same share size as if it was smaller. So in a higher volatility environment, I might be risking against the low, but I'm risking 2 points, let's call it, right? Something starts to bounce 2 points before I really have an entry criteria, and I'm risking against the low, and that's 2 points away in a higher volatility environment. I might be looking for it to move 10 points, and I still might be thinking it's a potential 5-1, but I have to risk that 2 points. Now, if I'm planning to risk $1,000 in that trade, and I buy 1,000 shares risking 2 points, what am I risking in that trade? $2,000. That's double my risk. 2 points means $2. Sorry, not 20 cents. So as the volatility increases, which likely means your stop is a little further away than it usually is because price is moving more aggressively in both directions, you want to be very aware of that. So you need to ground yourself in the concept that I am trading based off of where my stop is, and my position sizing has to be set appropriately. Because when things are faster and speeding up and traders are really struggling, especially as things are moving faster and maybe you have more trades on than normal, your P&L is moving all over the place because it's a higher volatility day. You have more upside and you have faster downside. You really need to ground yourself in the idea that it is so important to make sure my position sizing is accurate to what I'm expecting to do from a bet sizing perspective. So often it's your stop is just further away than it normally would be, but people don't make that adjustment, and all of a sudden they've turned a potential 1K loss where they could have made 5K into a 2K loss, and that's really, really dangerous for your psychology. And it does this thing that drives you out of your ability to stay emotionally aware of what's happening in the market and the opportunity. And that's really what today and this week is about. And tomorrow we'll talk more about something else, but this week we wanted to. Caleb, do you still have that graphic, the emotional awareness stuff? I know there are some new people and they didn't get to see it last time. And for all of you that saw it before, we got so many emails saying this was so helpful. And that's why we brought this week back. But do you have that graphic that you could share with us?
Yeah. The mood meter one?
Yep.
Let me see.
As we're talking about this, we just had that really good pop through view up. We'll see what's happening. We'll really get to see, this is a good strong bounce from the lows. And so we can really get a sense for how, was it just a quick short covering rally, or is this going to sustain and be more? And again, you'll hear a lot of us comfortable being very late to these trades versus feeling like we need to be early and predict.
Jeff, could I jump in with one other point? It's important, I think, to look at what is bouncing more and what is bouncing less. So, for example, how are consumer staple stocks, XLP, behaving relative to XLY, consumer discretionary?
Well, we can look at that just that here. I can tell everybody. I mean, we went away from the charts, which is good. So XLP has been strong. XLP has been very strong. It was strong Friday. Excuse me. It was strong Friday, and it's very strong today. XLU was not strong anywhere on Friday, and not utilities. I'm sorry. What was the other one?
Yeah, so I was comparing XLP to XLY, which is the
discretionary.
Yeah, consumer discretionary. Yeah, and taking a look at the Nasdaq shares compared to the Dow Industrials.
Yep.
So what we're seeing with the bounces is that it's the most value oriented. It's the least growth oriented that's bouncing more, that's showing relative strength, which is something we see when the larger investors are concerned about growth and recession.
And the CNBC term, and the term you'll hear on the desk, is flight to safety.
Right, exactly.
That's what the term is flight to safety is what people say. And that's, we're buying the boring stocks is basically what it is. And you'll have variations, flight to quality. When you get into certain environments, you'll hear a flight to quality. And that's usually actually an intra sector comment where they are selling the crappy garbage stocks within a specific sector, and they're buying the leaders in that. So, those are all, and I have a specific affinity for the flight to quality because that's always the most fun environment to trade when you're in a very volatile environment, because you can actually see things like you take some of the AI names and you throw it across a basket, and it's like the AI bad names will get just completely wrecked, where the strong AI names that have real revenue growth will just stay very firm. And so it's a very interesting dynamic. Anyway, so let's pull up the mood meter. Let's bring in this concept. We're just going to introduce the concept today with Dr. Steenbarger here. I know you're familiar with this. This is a concept that we had worked on and then found a resource that works. At the end of the week, we'll present a different resource that's a little more modified to what we do as traders. But this is, and I believe it's in the Discord. I'm 90% sure it's in the Discord somewhere. Jamie just posted a link to the chat in the chat as well. Thank you, Jamie. But this is a first draft / first second draft of what we are working on here. And you'll notice on the top left are all of these high energy, low pleasantness emotions, right? And as traders, we've all experienced probably every single emotion that's on this grid at different times. And we could probably pinpoint exactly all of these different times that we felt these different emotions. And we wanted to, we've presented this with Dr. Steenbarger before. Dr. Steenbarger brought a beautiful term to it, which is we want to give specific language to the different emotions that we're feeling. And this really just does that for us. It gives us specific language for the emotions that we're experiencing while we're trading. If I'm sitting there and I just watch everything bounce off the lows and I know I don't have anything on and I think we're going to go all the way back to the highs, I'm probably feeling pretty restless, right? On that first red column from the middle, right in the middle, I'm probably feeling pretty restless, right? I feel like I need to be doing something here. I need to be, versus me just sitting there and feeling that feeling. I can actually give a specific term to that feeling. And if I print this off, I can just check it off or put a little timestamp on it. If I've just exited a really good trade that I felt like I did exactly what I wanted to do and I executed appropriately, there's a chance that I'm ecstatic. There's a chance that I'm just tranquil. There's a chance that I'm just really satisfied with the actions, with my decision making. Those are all three different spots. There's even a chance that I'm a little depressed because I did everything I wanted to do, but then the stock kept going in my direction, right? So those are all different things that can occur and do occur with all of us. And so, Dr. Steenbarger, can you, I'll let you talk now, and you just talk through some of this stuff, and then we'll bring in that concept that you introduced of where our focus should be, regardless of where the emotions are. So go ahead.
Yeah, I thought I would introduce an additional dimension. What would vol of mood tell us? Volatility of mood. So, we're at the angry part, and then we're at the content part. Well, what if we move around a whole lot? That's very different than if we're relatively stable. And so, how rapidly the mood vega. Yeah. So not only can we have issues if we're kind of locked in a negative mood or what have you, or an overly positive mood for that matter, but if our mood shifts are volatile, perhaps reflecting the volatility of the market, that's a separate problem. That's a separate issue. And what we need to do psychologically to ground ourselves to be less volatile is different than what we need to do psychologically to move, let's say, from a more frustrated state to a more inspired state.
And that's a key distinction, because our goal as traders is to recognize where we are on this mood meter or be aware of it, but not really pay attention to it during our trading, because our focus should be on the opportunity, which we'll introduce it later, but the center is a bullseye. And that opportunity is where our focus should be. So regardless of where we're feeling, we should be grounding ourselves back in what's the opportunity. Our fingers in a moment of confusion should not be hoping or anything like that. They should be looking around, gathering information. We should be looking at the opportunity. As we're watching a trade set up, we might be somewhere on this mood meter. But where should our actual focus be? It should be on the opportunity that's presented to us. So there's that center point, which we need to come back to as much as possible. Yeah.
And Jeff, you hit it exactly. If you recall, when we talked about this earlier, I used the example because I teach at the medical school in Syracuse. I use the example of your surgeon. Where do you want your surgeon to be on this mood meter? Well, you certainly don't want them volatile and moving around to different moods. You would want them very, very focused. You would want them completely immersed in the process of what they're doing, which is that center point you're referring to, Jeff.
And that's the key. And so the practice that we have really doesn't have to start with a very complex process at this point. It really doesn't. All we have to do is be aware of where we are. And sorry, I'm just trying to pull up one other thing, and I don't know I'll be able to, but we'll try it. We just have to be aware of where we are at different times, and then aware of the volatility of that. So in our daily report card, we can write up at the end of the day, wow, I really noticed I was going from high energy to low energy, or high energy to low pleasantness. You know, wherever you're bouncing around, if you are, you can recognize that.
Or, Jeff,
Yeah.
In my life outside of markets, in my personal life, where am I coming in? You know, maybe I've had a real difficult week in, you know, my family life. Or maybe I've had really great things happen, but, you know, mood-wise, we naturally bring into the market where we've been outside of the market. And being aware of that, being at that focus place, being a good observer of ourselves rather than caught up in these moods, very, very, very helpful.
And I can talk about it from my own perspective because I've learned this pattern that I have, and I shared it with the group previously. But when I feel rushed, when I feel there are a lot of things going on outside of trading in my life, I notice how this doesn't become a two-dimensional grid. It becomes three-dimensional, and it's not tilted so that I will gravitate towards the center very easily. When I'm calm and have done my work and have communicated with my team and have done everything else, this becomes almost like a bowl-shaped object with that opportunity focus still in the center. And it's not extreme on the edges, but it's just enough that if I gravitate towards one direction or the other, it's pretty easy for me to just kind of slide back into that opportunity focus. However, if I'm coming in with these external stressors, particularly for me when there's a lot going on, which, you know, I have a lot going on in my life, and that's okay. I love that. But if I don't take that time to really allow that stuff to be on its own, and I feel rushed coming in, I actually flip this bowl upside down. So that center point, right, that opportunity focus is I have to climb up to get to it. And what's really dangerous is if I slip off the sides, that's really on me almost going on tilt, or it puts a much higher risk. So the perimeter of all this is essentially going on tilt, right? We can experience all these emotions and then gravitate back to the middle. And this was going to be the concept we talked about things, you know, that we were going to talk about later this week, but I'm glad we're introducing it today, which is we just need to make sure that any one thing can push us in a specific direction. But be comfortable with the idea that most things that you will experience as a trader, most emotions that you will experience as a trader, are not strong enough or should not be strong enough that they take you away from your ability to get back to an opportunity focus. You can be anywhere on this grid, but take confidence that You have the ability inside of you to be anywhere on this grid and make your way back to that opportunity focus. It might take practice and it might take specific identification of specific triggers, but you can make yourself back there. I've seen some of the most people that walk in through the door and on our desk, and you're like, that guy's pretty emotional, volatile, but yet they can find their way back to that center point so easily. It just took a little bit of practice, right? However, if you come in and you flip that bowl upside down and you make that three-dimensional object tilted the wrong way, it's really, really hard to maintain that opportunity focus. So being aware, one of the three keys that we teach our interns is you being ready. And what you being ready means is your ability to show up and just take in the information, allow things to occur, take advantage of the opportunities that develop for you. Don't allow yourself to get overrushed. And I will tell you for sure what Dr. Steenbarger said earlier about volatility in your trading and increasing your bet sizing without intending to. Guess which direction that puts all of that bowl? It doesn't put you in the right space. It puts you in the complete wrong space. So you want to be aware of these triggers as they come up. Don't be afraid of them. There's nothing really wrong with you. You are just experiencing the same emotions that all of us feel as traders. Maybe you're just you haven't been given a language for it. So you're not as aware of this. All right. The other thing that we found that I really wanted to highlight, and then we'll let Dr. Steenbarger kind of wrap us from here, and then we'll get into some of the things. Beatrice had sent the best. Beatrice, are you in today? If you're in, post yourself in chat, please. Yes. Okay. Caleb, can you allow Beatrice to ask a question if she would like? Any question you want?
Yes.
So thank you. So Doctor, we'll make one more concept. We'll present one more concept that we're going to be talking about this week, and then we'll give Beatrice the floor because she presented something in a really beautiful way, and we'll let Dr. Steenbarger in on what the challenge was. But the one other concept is, even within a trade, you can notice that there are specific emotions that you will feel as the price action evolves. You might enter a trade and feel really optimistic about it. And then you have one tick go against you and you get really angry about it. And that's that emotional volatility that Dr. Steenbarger was talking about. You want to be aware of this on a trade-by-trade basis. Because ideally, you're in a trade and you're not really allowing your emotions to go anywhere. You're just kind of observing the price action. You're keeping your focus on the opportunity, which is absolutely critical. So you can do this, you can use this emotional awareness grid as you're thinking about your day, but you can also use it as you're thinking about your individual trades. And so your individual trades can be a tremendous amount of information. If something made you angry, why did it make you angry? Truly ask yourself, why was I so angry about this? Thank you, Nicholas, for sending the Mood Meter PDF. Thanks. At the end of the week, we'll present a modified version of it, but wanted to present that concept too. It's a trade-by-trade basis that you can study, and it's also a day-by-day basis that you can be aware of. Beatrice, just wanted to highlight you really quickly. We have about 4 minutes. I apologize, we don't have more time. You presented a very nice list of the top tier banks, tier 1, tier 2, tier 3. It was really nicely presented, and I was glad how you went about that. So wanted to congratulate you on winning the competition. We'll post this one in the Discord for everybody to see and have access to. But are there any things that you wanted to ask me, Dr. Steenbarger, anybody, if you have a microphone?
No, she's on mute right now.
Okay. Caleb can let us know where it's going to be posted in Discord. Okay, Beatrice, if you're not able to talk, then I apologize. But congratulations. Thank you for taking the time to do the work. It'll get posted. It's just a really clean, straightforward look. And what we were doing, Dr. Steenbarger, was we were studying when, what are the tier 1 banks? When they upgrade a stock or downgrade a stock, not all of the banks have the same weighting. So it's important for us to put them in different groups. And Beatrice did this really nice, very easy to see visual guide to, okay, if you go ahead and get Goldman Sachs to upgrade and raise a price target, well, that typically has a little more meaning than if I'm going to Beatrice's tier 3 bank. Bank of Santander might not have the same weight. Northern Trust might not have the same weight. Western Alliance might not have the same weight as maybe a Citibank or something like that.
Suske.
Yeah.
Also.
Yeah. Yep. So these are all really important factors, and it doesn't take us much time to learn these, but they can be really helpful in us determining catalysts. So nice job. Congratulations. Thank you to everybody that submitted. We will have more of these challenges moving forward. But for now, Dr. Steenbarger, take us home. Anything we should be thinking about?
Okay. Yeah, that's wonderful, Beatrice. Love that. So I'll leave you with one thought. Everything in life is practice. So think about the mood meter and think about the mood meter in your life outside of markets. I had a situation earlier today where I was kind of in a rush getting ready. I had meetings, I had work to do. And what happens after I have fed a couple of my cats? One of them throws up all over the kitchen floor, and I'm in a rush to get things done. And I can feel the frustration coming out, coming to the surface. And so I made a very conscious effort to pick up the cat, hug her, tell her I love her, and clean up as quickly as I could. The point being that little episode is practice for not being controlled by our immediate emotional responses. We're all going to have emotional responses, but we all have the ability to step back and see a bigger picture. And if the more we practice that in day-to-day life outside of markets, the more prepared we will be for doing that within our trading.
That's great. Thank you. I love that. I literally wrote that down of everything in life is practice, because that is so true. And we get so focused, especially in trading, on the results and the outcome and everything like that. But it's really the practice that matters. And that's what we get presented with as intraday traders. That's why we love being here. Thank you, Dr. Steenbarger, for spending time with us today.
Well, thank you.
We appreciate it. Yep, we'll be working on this mood meter and some of the dynamics of it through the week. And we hope to have Dr. S back another time. If not this week, then another time. So thank you very much, everybody.
Jeff, you better have me back or I'm going to get frustrated and break my trading screen.
Well, we can't have that. So, all right. Thanks, everybody. Congrats, Beatrice.
Thank you very much, everyone. Bye-bye.
Thank you, Dr. S. Thank you, Jeff. And then hope everyone has a good...
setting all this up.
Of course, absolutely. Hope everyone has a good rest of the day, and we will see you guys tomorrow.
Awesome.